and with me is Sanjiv ji. And as usual, this week we are back here with our weekly tax questions. So if you have a tax question, you can reach out to us via Facebook page, or you can reach out to me directly via WhatsApp, and I can make sure to ask your tax questions directly to Sanjiv ji and get that answers. So I have a lot of questions today, Sanjiv ji. So we'll get started here shortly. But you might have noticed we got a couple of banners behind us, so we can see there's 3 Sanjiv jis today actually in the in the video. And the reason why these banners are back up because once again it's almost the middle of the year, and we always do the Wealth Summit at the end of the year. So we are just kind of starting to do preparation for that. If you want to register for it early, you sure can. It's on sanjivcpa.com, and you can get that done. But it takes like an entire year to really prepare for this event, and we are looking forward to bring a lot of exciting speakers, a lot of new strategies, a lot of new ideas to this year Wealth Summit. So I'm very, very much excited about that. So anyhow, without further ado, Sanjiv ji, let's get started with today's tax questions. So today's first questions comes about home office deduction. And I think this is especially important because a lot of people are still working from home office. So first question is W-2 employees. Can they take home office deduction or not?
Okay. So the IRS code is very clear about using the home as an office for your tax deduction deduction purposes. So the code says, as per IRS publication, it says that if you're using that home office exclusively and permanently, not permanently, exclusively and meaning for business, doing business from there, but exclusive word is there, then you can deduct that home office. What expenses you can do? You can take depreciation on the square footage of the home. You can do. You can take up part of the utilities, any part of cleaning expenses, depending upon the square footage of the home. So there are 2 methods of taking home office deduction. One is standard method, which is $1,500 you can get if you're using the home exclusive for business, and second is the actual method, which I just told you. So yes, you can use the home office deduction, provided it is used exclusively for business, provided you have a business, and also make sure that you document the expenses that you're using. And don't be afraid to use home office. A lot of people do ask this question: if I use home office, I've heard that it's going to be audit for that. No, don't worry about audit. If you're doing the right things, like for example, in your home office, you should not have any personal items, no bedding, no almirah. Other than that, you should have a table, computers, and systems, and whatever is required in an office environment. When it comes to W-2, they are not entitled to work from home. Of course, with COVID and other things, they were asked to work from home, and there were certain provisions there that time that they can do reimbursement. The employer can reimburse them for using that home office space, like computers and whatnot, and the chairs and whatnot. But that provision has gone. That was for COVID. So unless you show a valid reason why you're using home office for W-2, you will not be able to claim it. The other problem with that is earlier there was in a itemized deduction schedule, you can use home office under like miscellaneous deductions. That schedule has been gone. That schedule is no longer there with the Tax Cuts and Jobs Act. So home office deduction not possible for W-2, but definitely for business owners is a plus, always plus.
All right, so there it is. If you're a W-2 employee, please, and I'm talking to especially those of you guys who may be doing your tax returns on your own or whatnot. I think that's where you can make these silly mistakes.
Very good question about that one, this comment on this one, because I see a lot of clients when they do TurboTax and when they come to us, they put any number of expenses. Just put expenses. And TurboTax, I'm not pointing at TurboTax and other online softwares, they are just softwares, right? Whatever you input, they will take the result out the way you input. So they have all the flows, all the permutation and combinations into that. So just be careful. Don't put any expenses related to home just to get deductions and lower your taxable income, but that's not allowed.
All right. Now, Sanjeevji did mention that if somebody is a business owner, they can take home office deduction. In matter of
They
fact,
should. They
it's
should.
a great idea to
Oh,
do
yeah,
that
yeah.
because once you have a home office, then you're entitled to do a lot of other deductions, such as going to job sites and
Job site and commuting is no longer there. So commuting is a way that you can't deduct the automobile expense from going from home to office. When you have a home office, there's no commuting, so you can deduct the entire expense. Uh, the other thing with that one also is when you do the, the property tax payments. So property tax, as everyone knows, with the Tax Cuts and Jobs Act, they are combined with the state tax withholding up to $10,000. If you're living in California, you know how much state taxes you pay. So you may not be able to claim the property tax payment that you're doing. But when you use a home office, based on the square footage of the home office, you can use the property tax as an expense. So that's the way around the SALT limitations.
so there you go. So there are a lot of other things just kind of comes as part of it. So please, if you're not taking it now, like Sanjeevji says, requirement is you have to exclusively use that office for that purpose only. Don't mix it for other things. You should be using it regularly. That should be your primary place of doing business. So a lot of other restrictions do apply, but just do keep in mind that they do come with a lot of benefits.
Yes, I always keep telling to my clients, if you're working on W2, do something different. Do some kind of a side hustle business, or some kind of a development, or maybe product development, maybe app development, maybe kind of a franchise business, maybe a 1099. So maybe think about that other than just working on W2s.
Yeah, and here's a good way to look at it, right? So most of us, especially living in California, are probably in about 30 to 40% tax bracket. Would that be safe to say, Sanjeev?
Yes.
Right? Most people, not everybody.
Average is 30%.
There you go. So average is 30%. Let's stick with 30%, right? So if you can write off, let's say $10,000, that's almost $3,300 in taxes that you're saving.
Yeah.
So maybe that's kind of gives you an idea why this is important to do that. I mean, that 3,300 might not sound too big, but think about it. You can put in your Roth, you can put in your IRA.
It's your money. It's $300 to $275 a month.
So it starts to add up. That's the point. Okay, so here's the question. I'm a real estate investor. So those of you guys know about, that's a great thing about being real estate investor. Now, if you don't know what that means or how does that impact, we're going to be doing this webinar next weekend. So this coming Saturday. So if you have not registered for that, go on sanjivcpa.com and register for that webinar where Sanjeevji will be talking about a lot of things related to real estate. How does real estate helps you reduce your taxable income in so many different ways. So we'll be spending a great deal. So I'm not going to go into that, but this particular question is, hey, I'm a real estate investor. Can I use a home office? And obviously, if you're a real estate investor and you treat it as a business, remember, being an investor and being a business are a little bit two different things.
So let's say you're invested you're investing in mutual funds, or you're investing in a stock market, or you're investing in a stock market you are putting time into it. There are certain regulations, but let's say you're investing in any other venture. For example, investing in a fixed deposit, CD. So if you're investing in a fixed deposit, you're getting interest income, but it's passive. So investor means a person who is putting money for growth purposes, not his efforts, his services to grow that money. So if you're a real estate investor and just investing in real estate and in different areas, or you're just looking at cap rate and trying to get the maximization return on your investment, and you're not putting any efforts into doing meetings with the syndication or on your own, or putting time into it to look into the properties and everything. If you don't qualify as a real estate professional, definitely you cannot claim home office as a part of a real estate investment. Now, that being said, if you do a real estate investment and there's income coming from it, you can form an LLC and you can book some reasonable expenses in that one. But that is subject to reasonableness. We have to, of course, you need to connect with your tax professional, make sure they do the right things.
I think Sanjeevji mentions a great way to kind of understand this. If there is an income what kind of income are you getting? Like, how is that income being generated? Is it an active income? Is it a passive income? So a lot of that going to depend on that. Now, Sanjeevji also kind of touched on another key word here, real estate professional. So I want to clarify that real estate professional is a little bit different than real estate investor. Although a real estate professional can also be a real estate investor.
Yes. So, like for example, I am a CPA. I am a professional, right? So that's the word professional. But I can be investor too in real estate. So being a professional is different from investors. I'm a CPA. I'm doing my practice. I'm putting my time into it. I'm doing all those things. So that's active. But if I invest myself invest in real estate, I'm not putting my time into real estate. I become a real estate investor and a professional for my business.
So I hope we clarify that. And we're going to talk a great deal about all these kind of terminology at the webinar. So I'm glad that all of this kind of came up in this question. So next question is, my wife is providing 1090 accounting service for somebody and gets paid as a 1099 contractor. Can she use home office deductions? So obviously she's a business owner, 1099.
Of course.
So she can. Although Sanjeevji, that kind of brings me up another good question here is, what does 1099 really means?
1099 is a contract. It's a contract based on your qualifications and how you treat that person rather than as employee-employee relationship as an independent person. So 1099 is just the independent person providing services to the others and getting paid based on the hours they worked or based on the invoices they raised, time and material. So based on that, so I am a sole proprietor. So the services I provide to my clients, I get a 1099 from them. So that's what it is. 1099 is a way of reporting the contractor income to the IRS. So that when you claim as an expense on your return as a contractor 1099 expense, if you are running a business and you have a contractor, then and you should issue a 1099 to the person who's providing services, professional services again, professional services. Then you have to issue a 1099. If you don't issue a 1099, there's penalty for it, and person who's receiving it, doing the services, will receive a 1099 from you, and that person has to report that as income on Schedule C, which is business or profession schedule. So of course, then we have to look into whether they can form as corporation or whatnot.
All right. So here's another question. Same thing related to home office deduction. That my husband and wife both are doing business, and they both are doing different type of business. So can they take two deductions, or can they only take one?
Very good question. So if they are two professionals dealing with two different areas, not commingling among their services, and you can justify the square footage used for each business, yes, you can use home office twice.
All right. So basically what you're saying is, look, if husband and wife both are real estate agents,
then it does not make sense.
and they're working out of the same office, but what if they have two different offices in the same home?
Well, they are still, the profession is the same, so you cannot claim more. Of course, you can claim home office based on the square footage,
But not through the simplified method.
not a simple.
So just to clarify, there are two ways to calculate how much deduction you do. One is you prorate all the expenses, and the other one is you just take a standard rate, which is I think $1,500 still for the year. $1,500 for the year that you can take. So what Sanjeev is saying is, if you both husband and wife are involved in the same profession, he doesn't advise taking that deduction twice. But if you are in two different professions, maybe you are a real estate professional and the wife is doing accounting services, then yes, you can take two different.
Provided you're not using the space, commingling that space.
Right, you have two different offices, indeed. All right, so that answers that. So I think those are all great questions for home office because they do add up quite a bit. Now, I posted a blog post very recently related to real estate where we talked about how you can deduct expenses under $2,500 per line item on an invoice under the safe harbor rule for your not investment but rental real estate, basically. I guess they will be investment properties. So there were a lot of questions about that. So I'm going to ask you those questions. But just to kind of give a brief clarification on that, typically speaking, in a real estate transaction, when you have expenses, you got to amortize over the life of that particular, whatever it is that you're doing. But this particular rule gives you an exception. It says, look, if if you have a small expense less than $2,500 line item, you don't have to amortize. You can just write it off, right? Maybe you did some electrical work, maybe you did some plumbing work or something like that. Small thing. So there are a few questions related to that. So I'm going to ask Sanjiv ji about that. Okay, here's the first one. Property was a long-term rental, now converted to short-term rental, or furnishing now deductible as an expense as long as they are below $2,500 threshold.
Yes. So again, whether it's long-term rental or short-term rental, like you rightly said, if you're less than 2,500, with the repair regulations that was changed a few years back, this minus expenses, we call it immaterial expenses. So if you're less than 2,500, instead of capitalizing, you can always book it as an expense. So it doesn't make sense whether it's a short-term, or it does not differentiate between short-term and long-term. The only difference with the short-term is, you have to qualify for short-term. The customers should be staying in that home not more than 7 days in a year. So that's the regulation for that one. And there are other regulations too. So it doesn't matter whether you have short-term or long-term, as long as it's repair expenses and you can claim it under $2,500.
So that's the magic number. So 2,500 comes to your rescue. And remember, it's per line item.
But remember, it's not standard that you have to claim 2,500. If you have expense and you have proof for that, you can claim.
Of course, yeah. Sanjeev ji always put that disclaimer out there. All right, so here's an interesting one. If I replace a water heater, total cost is $3,000. Equipment is $2,200 and labor is $800. Can I split those up and deduct them under this guideline?
Very good question. So now, if you have a water heater, you cannot just install a water heater by itself, right? It's equipment. You need labor to put all the panels, put all the things on the wall. So it's part of the installation cost of the equipment. So it will not be treated separately. It will be included in the total cost of that equipment, and you can take bonus depreciation. Bonus depreciation is around this year is around 75%. You can take 179 depreciation too on that one, so there's no limitation on that. Up to $1 million you can take. So yes, you can use strategies like this, but you should not put as an expense or differentiate between labor and equipment.
And the other quick point I want to add to that as well, so Gigi, is it's always a good idea to kind of keep your invoices clear. That helps a lot, so that way you know what is labor and what is actual equipment. So the better organized you are, I think they can help you in other places. Your CPA might ask for those information, because I think And by the way, if you have a CPA who doesn't ask you these questions, and I know we meet with people sometimes like that. Be careful with that. If they're not asking you, then that's not really a good sign either. Like, you got to really have your books in order.
I want to clarify at this point. It's not only the problem with the CPA; it's also a problem with the client. Client feels sometimes very like they are working with the CPA for a long time, so they are fully adjusted to the CPA requirements. They feel comfortable working with the CPA, but they don't realize how much they might be missing on the deductions, because the CPA is not providing that service, or they are not telling the CPA what type of work they are doing or what type of expenses they have. So sometimes it makes sense to not to, if you don't want to change CPA, you're fine, but sometimes it makes sense to get a second opinion, a second review on the tax returns, so that you are maximizing whatever is available to you.
Great point. And one of the ways you can do that is by getting to know your CPA. If you only go to meet with that CPA once a year during tax time, and many times you don't even do that, then that might not be as helpful. So
and the thing is, why they're going once in a year? Because they're not looking at the time management for their taxes. They think tax is a liability. They just want to get away from it. But hey, tax is about 40 to 50% of your income tax, and then we have sales tax, we have property tax, we have GST, we have the other types of taxes. So total taxes comes around 60% of your income. So if you can save 10 to 15% in taxes and spend some time in organizing your documents, why not?
All right, so here's another one. I know Sanjeev, we are running short on time. The video is kind of getting long, but I'll try to ask as many of these questions. And once again, if you guys have a question, you can reach out to me via WhatsApp, or you can post a comment on the Facebook, and then definitely I can ask those questions. So this one seems like more like a bookkeeping question. Somebody's doing their own bookkeeping, which once again I recommend if you have, like a proper business going on. It's a good idea to engage somebody who knows how to do proper bookkeeping, because that itself can be quite costly, because whenever the audit will happen, they will ask you, how did you book those expenses? So if you have a proper books, I think that will go in your favor. Another point I want to point out is a lot of time people think of bookkeeping as a $20, $50, $100,000 expense because they think of hiring a person. That's also not true. Your tax professional, providing they actually have bookkeeping services. Not everybody has it, but if they have it, they should be able to customize a plan based on your unique needs. I know we do that here at Sanjiv Gupta CPA firm. We do bookkeeping, we do payroll, we do taxes. So depending upon how many employees you have, what kind of business you have, we kind of give you a flat quote based on that. So do keep that in mind. But to answer this person's question, they're asking, hey, look, I'm in rental business, so I have short-term rentals. And I typically just put all the expenses in one category. Should I be putting them in different categories, such as linens, mattresses, furniture, electronics?
Yes, like all the asset side, the equipment side should be listed separately. The repair side should be listed separately, like repairs up to 2,500 is allowed. Then the cleaning maintenance, because if you look at the Schedule E, which is a rental property schedule, they have provided clean line items for every expense: cleaning and maintenance, management fee, legal and professional. Then we have property taxes, interest payment, and the HOA fees. Then there's other deductions. You have to specify what type of deductions. So all those things are important to categorize those expenses. So as you rightly said, instead of doing it by yourself, and you have rental properties, it's better to get it done with a tax professional who have knowledge and understanding of how the real estate works and how to put those expenses in proper categories and maximize your tax deductions.
All right, I'll take one last question here. So this one, the gentleman wants to get some advice, because what he wants to do, he has an LLC, and under that LLC he has some rental properties, and he wants to issue a note. So he doesn't tell me what does he mean by that. I'm guessing he wants to borrow the money. I don't know if it's for himself or he wants to give it to somebody else. But he wants to, obviously when you issue a note, by the way, you cannot just give a free money to anyone. If you issue a note, you got to charge reasonable interest on it. Okay, that's the key category. And he didn't say that, but I think that's what his question here is, that, hey, look, if I issue a note, I'm going to charge a reasonable interest. And that means that interest will be booked as an income. Okay. Now, his question is, okay, so where did that income go? Because it's not a real estate income anymore.
No, it's an interest income. So interest income comes from Schedule B of 1040. So any interest income comes from any sources is booked under that. So it's not a real estate income. But if you have an LLC, you can put it under other income column. There is a column that says other income, so you can put it there.
Yeah, and by the way, if you're watching this video segment, and I'm sure you are because you are the one who asked the question, great reason for you to engage with somebody who can really help you and guide you through it. Not necessarily just for one question, but I'm saying you want to grow that business. You want to buy the second property, the third property, the fourth property, and the more organized you are, I think it will make it so much easier for you to secure better loan, have a better credit under your business name, have a better protection against audit, better insurances, because you know what exactly you need to really protect. So much more comes along with it. So I think all bunch of great questions, by the way.
All the great questions.
Wonderful questions. So please do keep sending those questions to us, and I'll be happy to ask those directly to Sanjeevji and get those answers to you. Once again, our next webinar is this weekend, this Saturday. So if you have not registered, just go to sanjeevcpa.com and register for that webinar. And going forward, you're going to start to hear a lot about Wealth Summit, what we are planning on doing this year in the Wealth Summit. Now, talking about that, if you are a business owner and you want to exhibit at the Wealth Summit, if you think you might have a product or service that can help the people who come to Wealth Summit, please do reach out to me. I'll be happy to talk to you and see if we might have a synergy there. If you can benefit other people, then why not, right? And then if you guys have a suggestion, questions, maybe you were at the Wealth Summit last year, and then you might want to tell us how we can improve it. Once again, I'm always here to talk to you guys and learn more what you guys think. So once again, Sanjeev ji, thank you so much for your time. Sanjeev ji comes with me at least 2-3 times a month, if not every week, to answer your questions. So I greatly appreciate that. And then in addition to doing these, you probably heard him on radio, and we do a lot of webinars and seminars. So Sanjeev ji do spend quite a bit of time to help the community in a free forum, basically, where there's no cost involved. But if you have a specific tax question, maybe you're thinking about doing a large transaction, maybe you're thinking about buying or selling something big, or maybe moving funds around, or maybe you're thinking about starting a business or already have a business. In all of those kind of situations, please don't rely on these general advice. For every question that we answered today, I'm sure we did not really cover every single idea behind it. It could, maybe it's a good idea.
A general idea is not it's not customized to your requirement. Every person's situation is different from others.
Yeah, so please, if you're in those situations, just pick up a phone, call 510-825-7563 number, and book an appointment with Sanjeev ji. Not a big deal. Spend 30 minutes. Just verify it. Even if you're not sure, just verify it. Make sure you're. And I say that because I was talking to Sanjeev ji just this morning alone, and he was giving something, and I think the person was not really quite able to grasp it because he was giving us such a general advice. And I'm like, man, I hope he just doesn't rely on that and really do book a consultation appointment, because when people don't, that can be very, very risky, because that whatever question you just asked, we gave you a very, very brief overview behind that. But hopefully that's still helpful, get your curiosity answer, and at least motivate you to engage with somebody who knows how to answer those questions for you. So once again, guys, thank you so much for spending your time with us, and I'll look forward to meeting you guys on the next webinar. It's on Saturday at 10 o'clock. So just register and I'll send you the Zoom link. Very simple to join. And after that, I'll see you guys in our next video segment in another week or 2 weeks. Thank you.